Hey, what's happening? Trader Tim from EminiMind, doing a trade recap video. It's the last day of October, Halloween, October 31st, and some better moves today, and even yesterday on the 1 minute chart, but specifically today, the notable um, move here was the break of the swing low, which also coincides with the daily 61.8 here from last week's low, and the the reason that's critical is because when you break a swing low, that solidifies this up here as a lower high right here. So now we're in at least a short-term situation where instead of being higher high, higher low, higher high, higher low, higher high, now we've come down and we put in this high. At this point, we were below this prior low, but still hanging on to this 21 EMA as far and the 50% retracement. And then this day here on the 25th, that was a little suspect as far as, at one point in the day we were kind of this big green bullish candle, and then we sold off into the close and put this topping tail in. And that topping tail being below the all-time high, then kind of gives way for the potential to be a lower high as soon as we take out the swing low. And that's what happened today, taking out the swing low. I, to be honest, I was pretty confident we would make it back to make a double top here. I'm kind of glad to see some, or a little bit surprised to see some of this better movement of being so close to the U.S. election here. So Tuesday we have the election, and then Wednesday, Thursday next week is the Fed meeting. Thursday will be the meeting announcement, so it won't be on Wednesday; it'll be on Thursday, a week from today. But leading up in the last 2, 3 weeks, things have been very, very slow, and we've been in more of a period of consolidation. And then back here was a period of consolidation with just a couple of trending days in the mix, maybe 4 days here. But otherwise, it's been just a lot of chop and consolidation. So this morning, I drew up the gap or the low from last week on the 25th and marked that. And then I also like to pay attention to the gaps, and we are coming down to the close from the 7th of October earlier in the month. So this 57.48.50, that'll likely trade here later today. And then really the next gap below that is a 56.90.75. So we're breaking the daily 50% retracement here, um, right down this 61.8. And then as we come into some of these prior gap fills, some of those can act as support if we come down later today. So let's go intraday and we'll run through a handful of trade setups. Here is, oh, I'm gonna go back to this. So this was that swing low, 5,800 basically. We took that out early and then started selling off. This first inverted hammer was a very nice setup. It was just a little bit big, so it was about 6 points. Um, I typically use 4 points as my threshold on the 1 minute chart, so if it's bigger than that, if it's a really, really good looking setup or if volatility is really high, you can cut your position in half. I will do that sometimes to take the bigger ones. I chose not to take this one today. The breadth actually was not that negative, and it still isn't that negative to be down, point and a half or 1.5%. The breadth is only -2 to 1, and earlier it was even in the -1, 1.7, 1.8 in that range. So I thought we could get a little bit bigger bounce and the candle big, I decided to pass on that one. But then we had a retracement actually. I haven't had a lot of those lately. Well, I guess the first trade that traded was the 15 minute, and that hit its 20-point target already. That was real quick. So first 15-minute bar, sell stop one tick below the low, 20-point profit. Boom, that one traded and hit its profit target pretty quick. The first retracement that I had was in here. It was a nice little double bottom. This is pretty textbook here. Double bottom, and then we broke. So here are the two low points, the double bottom, and then we broke the high in the middle and the prior swing high as well, and pulled back 57, 75, 50, and then I just trailed the next retracement like so, put my stop below the 61.8, and then we started ripping. And so when we did that, when we started going, green, green, green all the way real quick, this was only a matter of like 2, 3 minutes, this green push up, I just started trailing each candle and put my stop underneath this bar is where I got stopped out on the pullback. So I just did 2 ticks below that candle. And that was a nice little run up for, I think it was 7.5 points. That's what I ended up with there. And on the 1 minute chart today, there was, so then we bounced, came up to here. We had a 50% retracement, this nice inverted hammer, double top. This was a really nice setup right at the 21 EMA. I took that 1 tick below the inverted hammer short, and then that traded down. Got a little bit of a knockout here. We went above the prior candle's high. It did go for 3 points, and then rolled over, but I brought my stop down above this candle here, and then that's where I got taken out. So all in all, I was pleased with the day. Um, Nice to get a little counter trend on the retracement, the 512 tick chart, and then to see some inverted hammers, following this 21 EMA down, and then having the 15 minute. The 15 minute's been awesome the last 2.5 weeks. Whole bunch of 20-point moves. So that's been really nice because the September and first part of October it was not bad, just it was just kind of slow, and we weren't getting a lot of 20-point moves. So that was today. And then I just wanted to comment quickly on yesterday because I had two 1 minute trades. So let's just go back to Wednesday real quick. Didn't have any retracements. Um, the 15-minute yesterday ended up taking me out for -4. So it went to plus 15. Oops, 15-minute chart. So 15-minute candle was really big, so I used the half of the candle size as my stop. It went 15 points, and then I moved my stop to -4, and then it came all the way down and stopped me out before getting to the plus 20. I did go back through my notes or through my trades and my notes for the last 4 years, and there's really only about 10, maybe a dozen days that I found per year that because I record the max profit on every trade, so it was really easy for me to just sort and then scroll down through those trades in my Excel log. And there's really only about 10 days a year where we go to plus 15, but don't make it all the way to plus 20. So I was chatting with another trader about, is -4 really the most optimal point to place to tighten your stop to? And because it happens so infrequent, uh, at this point, yes, that's there are times where you go plus 15, you come all the way back down to you know plus 1, 2, 3, 4 points, and then it makes its way up to plus 20, especially when volatility is higher. So not going to make any changes to the 15-minute at this point, um, and just keep doing the -4 when we get to plus 20. When volatility is really low, like when we're below 25 in the VIX, you can get away with using a -4 point stop all the time. On the 15-minute, you'll get, you'll have more stop outs, but they're only -4. So then when you do hit that plus 20, that can cover a lot of stop outs. So the results for doing it that way instead of using the full candle when volatility is low, that does work really well. That's actually how I originally started trading it 5 years ago, 4 or 5 years ago, just always using a -4, and then volatility kicked up, and so I started using the opposite end of the candle, and then that worked super well. So I just kind of continued doing that, and then we kind of had this drift down in volatility the last couple years, and I, I kind of forgot that I had started with the -4. So I know some people have just stuck with -4 the whole time and done it that way, and that's fine. So let's wrap up with a couple trades from yesterday on the 1 minute chart. Let's see, 645, 1030, 645. Oh, yes. Oh, this was the perfect higher low. We talked about this on Tuesday in the live trading session. And so here is a low that we put in. I did not take this candle itself, but we got a little higher low. And when we get a higher low, that's basically a signal that, okay, we were in a downtrend. Um, and then we put in a low, higher high, higher low, and so this higher low is where you want to enter. This inverted hammer here was a nice little setup. It was just a little early, and I've tried to be a little patient off the open, so I didn't jump in short there, but I did take the long, and that ripped all the way up to the 21 EMA before getting a little bit of a pullback. Um, We've talked about, trailing swing lows versus trailing each candle. And again, when volatility is lower, trailing swing lows works super well. So you just keep your stop below the swing low, moves up, pulls back. When it breaks out, move it up underneath the swing low again. And that does work really well. But it's also nice to take a profit. And so trailing each bar gets your risk tightened quicker on the trade. And assuming we're going to have a rise in volatility after the election and into 2025, that's how I plan to keep trailing my stop, is just trailing each bar as we go up. You could, if you have multiple contracts, you can do a mix of both, but you just don't want to make it too complicated so that you risk, having just errors in your execution by clicking on the trade ladder or whatnot. So and then the second trade I took was at 728. And these are Pacific time. Oh yeah, this was a double top here, and then took it below, went short below this like inverted hammer, inverted doji, and it went down a little bit, but then we just kind of chopped around from there. So minus 1.25 on that one, and plus 6.25 on the first one. So decent couple of days, and hopefully things continue to get better and just more trading opportunities as we get through the election here. So I am going to be doing the master class that I do every year at the beginning of December. So you can sign up for that over at EminiMind.com. And I hope you have a great rest of your week. Happy Halloween, and we'll talk to you all soon.